Southeast Asia's ride-hailing giant Grab is set to go public through the world's largest SPAC merger, valuing the company at $39.6 billion. Fresh off the announcement, this week we talk about the rise of startups in Southeast Asia. With over 650 million internet users, more than America and Europe combined, Southeast Asia is arguably the most exciting region in the world right now to create disruptive tech companies. With more dry powder, higher valuations, the rise of unicorns, and imminent exits fueled further by large corporates, Southeast Asia is definitely now on the map if it wasn't already before. In comes my next guest, Michael Lints. Michael is a partner at Singapore-based venture capital firm Golden Gate Ventures, currently leading the Growth Venture Fund. Since joining the firm in 2013, Dutch-born and raised Michael has helped to raise over $60 million for Golden Gate Ventures and its portfolio companies, raising later-stage rounds from external investors as well as leading 2 early strategic acquisitions. We begin to unpack the growth story that is Southeast Asia and why LPs and other investors are rushing to invest. You don't want to miss this.
I think what was a big spurt or a big ignition for the ecosystem was 2015, 2016, when a handful of Series A funds came online. Whether or not backed by Singapore Temasek, but a lot of these funds kind of helped get sort of this first stage of entrepreneurs to the second stage. Now, in 2017, 2018, we saw the first signs of exits. And exits were around, I'd say, the $100 to $200 million range. But the fact that they were actual exits showed that there was life into this ecosystem. So you saw Gojek, you saw Grab making a number of acquisitions. A lot of the acquisitions were actually from the local of the regional unicorns.
Right.
But it also kind of helped showcase that there is something happening in the region. And then if I fast forward to 2020, where formerly Garena, had a stellar year on the New York Stock Exchange, I think it really opened up a lot of eyes for institutional capital. So investors from the US were looking to invest in companies here. Y Combinator is seeing more and more Southeast Asian founders, within the demo day. So in terms of exposure, Southeast Asia is just getting more and more exposure to a global investor audience. Well, that obviously will lead to more capital coming to the region. That will lead to more companies getting acquired. And then I think, with the rise of SPACs in 2020 and 2021, it was sort of the final push that the ecosystem needed. And now with Grab, it shows that, oh man, it is possible to generate a multi-billion-dollar company to literally compete with the likes of Uber in a sense, and to be this super app for the region. So I think this was sort of the final push that the ecosystem needed to showcase the world that it's matured. 2, there are amazing founders, and 3, it is possible to actually generate exits from this ecosystem.
Yeah, and I love everything that you picked up upon there. And I think funding, flushing cash into the ecosystem, especially when it's nascent, is necessary. In fact, last week's episode, we had Chris Schroeder, an American investor who is, investing in the emerging markets. And I've heard you speak about investing in emerging markets as well. Before we talk about the exits, which is exciting and love to, go deeper on that. I want to hear a little bit about what you've learned over the years in investing in emerging markets, right? Southeast Asia, despite all of this great news just this week, compressed into one, as you said, it was a journey. I remember Grab knocking door to door, the infrastructure is not fully built up. There's a lot of challenge actually in even just building a startup in Southeast Asia, where it's very different from country to country. So even the fact that we have 650 million internet users, right, from Vietnam to Singapore, it's a totally different landscape. So talk to us a little bit about what you've learned in investing in these different markets here and what's changed over the years.
Yeah, so I'll give 2 perspectives. I would say one is our perspective of investing in the region itself, but I'll give a perspective as a venture capital firm who's been fundraising over the last 10 years as well. What was interesting in the first few years, we really had to explain and almost market the region. we weren't even marketing our fund because we didn't get the chance. We always had to convince investors to even look at Southeast Asia. If you look at investors looking at the Asian market, they would typically look at India and China first, which makes sense. Huge markets, huge potential. You can say those are homogeneous markets, and they felt that Southeast Asia was still, it was difficult because there's so many different countries. It was very young, very early. Sort of the landscape wasn't fully matured yet. So in our initial years, we really had to sort of fight for attention from large institutional investors, and that definitely took a bit of time. I think at the moment, it's a slightly easier journey because you don't have to explain why we are investing in Southeast Asia. Everyone kind of understands, and it's more about the strategy and how you are picking your target.